This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. Welcome back to your TF Metals Report weekly podcast highlights for the week of April 5th, 2021. At TF Metals Report, we provide these podcasts every day for our members, also with analysis every morning as well, and a vibrant online community in between. It's a great place if you are a precious metal investor, trader, or enthusiast. And we invite you to join us again at tfmetalsreport.com. But we don't just focus exclusively on the precious metals at TF Metals Report. We also take a look at the mining shares from time to time. And back on Monday, April the 5th, we concluded our podcast with a discussion of what looked to be a looming breakout after 7 months of consolidation in the mining sector. The charts of bellwether big caps like Newmont Mining and Franco-Nevada both look to be improving with moves through their downtrend lines, but also through their 200-day moving average. Could this be indicative of a coming surge in the mining sector? Well, we've got quarterly earnings on the horizon, too, in the next few weeks. Everything is coming together for a rally in the mining shares, and that's all part of what we discussed back on Monday. And then look at Newmont, right? How many big ones are there? Newmont, Barrick, Agnico Eagle, Kinross. Anyway, there's a handful of them. We'll look at where Newmont is. It's above its 50-day. It's also above its 200-day moving average. So it's a little flip from Franco-Nevada, where Franco-Nevada was above its trend line, but below its 200-day. Newmont above its 200-day, but still below its trend line. In fact, today's peak, right on the line. Let's get Franco-Nevada to keep rallying up to its 200-day. Let's get Newmont back above, let's say, 65, 66. And it would be starting to get very clear that the lows are in for the mining shares. Again, with earnings season coming up again very soon, starting in a couple of weeks. And I will remind you, first quarter of last year, the average price for gold, if I recall this right, it's coming off the top of my head, was like $14.80 because it went to $15.80 in the second quarter. But it was $14.80. What's the average price for gold here in the first quarter of this year? We started 1900, finished down there at 1700, so 1800-ish, 1780. A good, solid, at least 10% higher than the first quarter last year. So year-over-year comparisons are still going to be fantastic for the miners. So maybe the sentiment shift, maybe prices finally gradually shifting. Maybe the news will be good when the earnings come out and you can begin to see where maybe a bottom is in. If you're a regular listener to these weekly podcast summaries, then you know we follow the chart of COMEX gold very closely. And over the last few weeks, we've watched as gold has tried in vain to get above a trend arrow that we found at TF Metals Report all the way back in August, and it still serves as resistance today. Well, guess what? Finally, on Tuesday, April 6th, price did get above that trend arrow. That has significance and meaning for the days ahead, and that's what we were talking about that day at TFMR. Do you realize, remember just a week ago, we were talking about gold's RSI being down like at 33 or 4, and how that was always indicative of a low, at least over the last 12 months or so, and how silver's RSI had gotten to 30, and how that was a pretty good sign that we were near a low, and the dollar was at the highest RSI in a year and all that stuff. Do you know that, let me lay this on you. Coming out, we've had 5 days of rally in a row. If you count yesterday, being up $1. Well, not 5, I guess 4. We didn't have any markets, weren't open on Friday. So we got 4 green candles in a row. the RSI on GC, the gold contract, it's now actually over 50. Okay, so it's not oversold anymore. It's actually neutral at 51 or whatever it is. Okay, fine. But do you know that is the highest RSI, momentum sentiment indicator, since January the 7th, 90 days ago. Remember when we were on January the 7th, we were looking like we were breaking out, we were getting ready to roll, everything was looking good, and then we were smashed and crushed, and, well, anyway, I don't have to go over that again. But as a measure of sentiment and enthusiasm, highest RSI number since then. So we're getting to a spot where people and machines are getting interested in owning gold futures again? Yeah, maybe. Speaking of trend lines, on Wednesday, April the 7th, our focus turned again to the mining shares and the big ETF, GDX. That's a major silver miner ETF. A lot of companies in there like we discussed back on Monday, Newmont, Franco-Nevada included. Well, the GDX has its own downtrend line that goes back to August of last year, and the GDX is also trying to break out and send some positive signals ahead of earnings season. And finally, the GDX. Boy, this is going to be interesting too, isn't it? That's the bull flag line on the GDX. And again, it's not just a daily chart where this line's important. It's on you can pull up a weekly chart, you can pull up a monthly chart, you can see the clear breakout above 3150, rally, pull back to 3150, rally all the way to 46, and now here we are again. Okay, on the monthly chart, it's a pretty clear cup handle breakout bull flag. Well, look at that flag. From that high August the 5th, we got all the way up and established the flag in the middle of September, could not get through. Okay, that's your first point. And then finally, after holding above the 50-day moving average in June and blasting then from 32 to 46, we came down in August and rode the 50-day back higher until we established that point in the middle of September. And then a couple days later, gapped down, broke down below the 50-day, and it's been big pile of crap ever since, with a couple of different exceptions. The first one coming November, I want to get my dates right, 5th and 6th, right after the U.S. election, getting above the 50-day and getting above the bull flag line, only to be immediately reversed on the 9th and jammed lower. Then you bang around in the middle of December trying to get above the 50-day. Finally get above it on the first trading day of the year. Get above the bull flag as well. We spent 4 days there before getting gapped down again, smashed lower, all the way back down through the 50-day again, and being held below there all the way through February, plunging in early March. Coming up a few weeks ago, what do you got, 1, 2, 3, maybe 6 candles centering on the bull flag line and the 50-day, falling back again. And now look where we are. 4th daily close in a row, back above not only the bull flag line, but the 50-day moving average. Again, do you think tomorrow's important? Do you think the rest of this week? Because if we can extend from here, if we can get a break, we get the bond market to rally, get the dollar to pull back, and get some interest in the miners, and we finish the week at the highs of the week on Friday. Somewhere like 34.50, 34.70, something like that. I mean, we're going to be looking pretty salty, thinking, look at this. Higher low back in late March. Moving higher, we got earnings season coming up, everything would look pretty good. But if they come and smash us tomorrow, like they did in early November, like they did in early January, and we get some huge crunch tomorrow that we open down, say below 33.40, where that 50-day moving average is. We open at 33.35, down 60 cents, and then trade even lower and finish the day down like 32.50, back down. I mean, we wouldn't want that to happen. And it would start to obviously, it wouldn't invalidate the low, right? Because we just made off of that early March low, you came up to 34, pulled back to 32, and now we've just gone past, to slightly higher high. So if we were to pull back and come back down to the flag line and hold it as support and start moving higher again next week, then everything would still be okay. But I'm certainly going to be curious to see what happens tomorrow. Our Thursday conversation this week included our old friend Denver, Dave Kranzler, who runs a great site called Investment Research Dynamics and offers 2 subscription newsletters, one of which is the Mining Stock Journal. You should be sure to check it out if you're interested in the mining sector. Well, Dave obviously is interested in the mining sector. So just as I'm watching the GDX and watching for breakouts, so is Dave. And he discussed some of his thoughts on a pending breakout on Thursday, April the 8th.
Wow, I haven't looked at a 5-year daily of GDX in a long time. Holy crap. That thing looks like it's ready to launch.
Yeah, it does. And if you look at it on the weekly chart, of the last 10 years, that sort of thing. Yeah.
Wow.
That's faked us out a couple of times.
Yeah.
Okay.
Actually, you can. I mean, there's really. I mean, I'm not a chart expert, but I mean, it kind of looks to me it needs to push a little. There's kind of a downward sloping trading channel that it's been in since August, early August, because that's really when this pullback started. Even though there were still a lot of junior mining stocks that were popping through the end of the year and early this year. But it looks like it probably needs to just there's the upper bound of that downward sloping channel. It still looks like it needs to pop out of that, and it looks like it's the boundary right now is the 100-day moving average. So yeah, I think if it, technically speaking, if it pops above that, it's off to the races.
And on Friday, April the 9th, we finished the week with a pullback in the precious metals, primarily due to rising interest rates today, based off of the latest U.S. Producer Price Index inflationary data. This should come as no surprise. At TF Metals Report, we've been expecting this number and next week's CPI number to come in above expectations. The computers that trade the futures contracts see rising interest rates and they dump COMEX gold and COMEX silver. That's exactly what happened today. However, interest rates have fallen backward. The dollar has fallen backward, too, through the trading day. And though both gold and silver are down, they're well off their lows as we wrap up the week. Most importantly, in COMEX silver, with positive resolution of a chart pattern we've been following now for the last couple of weeks. There's a downtrend line that goes all the way back to Silver Squeeze Day, February the 1st. You can see how neatly that connects with a series of lower highs that followed, but also great support, not only at $25, but at the 200-day moving average. You had a false breakdown and stop run last week, but now we're back above the 200-day moving average and holding it as support. Now, as we end the week, going into next week, we'll want to continue to do that, and then we can probably make a run at 26 and even 26.50. Thank you very much for listening to your TF Metals Report weekly podcast highlights. We invite you to join us at TF Metals Report. Become a full member. It's only $15 a month. It's a vibrant online community, and we'd love to have you there, and hopefully we'll see you there soon. Have a great weekend, everyone.